Okay, so welcome to lecture 10, and in this lecture we're going to be getting into support and resistance, okay? And this is kind of, the bread and butter of every technical analysis. Being able to identify where support areas are, where resistance areas are, is very, very important. Not just in terms of, finding triggers to take a trade, but, for analyzing market structure, to see kind of areas where you are going to be getting interested in, doing some further analysis to try and narrow it down to find a good trade setup for you. It's just a super important part of the job, and it's one that's not too difficult to get right, but very, very hard to master. Okay, so to begin with, what is a support and resistance zone? So all it is in simple terms, okay, a support level is a price point on the chart where we have clear confirmation that there are buyers willing to meet price there and supply enough demand for it to form a base of support for further price movement. Okay, so an obvious point here is we have this little box right down here. Okay, and as we can see throughout this entire range, so this range lasted 147 days. Okay, so in this range of 147 days, every time price came down to the $18,000 level for Bitcoin, roughly thereabouts, there was buyers coming into the market and offering this as a level of support for future price action. And what we can see is that this was respected, as we can see by these wicks showing that buyers came in when price did get down there. So this is the weekly chart. We are looking at quite a high time frame right now. So what we can see is the wicks came in, buyers are here, demand is here at this support level. We can mark this up at a support level until eventually it does in fact break. And when these do break, they tend to break quite violently, especially when you're looking on them on a higher time frame. Okay, so when this support level was broken, we can see this one weekly candle took price down a whopping 25%, and we can see the support was well and truly taken out, and this gives us a new period of price action below this previous support level. What we can actually see, interestingly enough, is what happened in the future is this area of support actually turned into an area of resistance. Again, now this is an introduction to resistance levels. So resistance level is just a point in the chart where we identify that there are more sellers than buyers. Okay, so there's people willing to sell at that price point on the chart, and that forms a horizontal resistance level. If we come down to a lower time frame, we can see this more clearly. So you can see the buyers supporting price here at the support level. We can see there was demand here. When price came back up to touch into this level, we got met with very heavy selling and it pushed us down. Okay, so this support level, which was once a support level, when it was broken through, it then proceeded to be turned into a resistance level. Okay, and when that eventually was broken, just like over here, it caused a very, very sharp reaction in the market and was fantastic opportunities right there for traders. So another resistance level, which kind of shows the same principle, is right here at the $25,000 level. Okay, so as we can see in this range over here where we had this support, resistance came in at just around the $24.5 to $25,000 level. Okay, when price came back up after this large pump in February 2023, we can see this was met as resistance once again and price came back down. So this is identifying another resistance level, and likewise, just the same as these two times here, when this resistance level was broken through, we can see that price moved astronomically. Okay, we had a huge candle there. This weekly candle moved a whopping 25%, very similar to this candle right here actually. Price has kept going up ever since. Okay, so I've come down to the daily time frame for now, and what we're looking at here is a slightly more complex example, but same again, what we have is a clear support level defined right here. As we can see, we've got multiple touches into the zone. You notice how I'm not super picky with lining up with exact bottoms, getting this perfect, because that is not as important to us as just knowing that there is a zone of support there. If you try and use these zones to pick out a trade exactly, what's often going to happen is similar to what's happened to a lot of traders here. So what we have here is a descending resistance line, and I've shown you so far these kind of horizontal levels which match up to a certain price, but what you can also have is you can have resistance ascending, and you can have support ascending, okay? So in this scenario, we have this descending resistance line. We can see that price keeps coming back up, touching it nearly perfectly and getting rejected. So sellers are moving down. The sellers are getting more aggressive over time. What we had here, okay, we can see by this massive wick is price broke above this descending resistance line, and a lot of traders thought this was the start of a new trend, okay, and we even made a higher high on this. But we can see in this same day, price was harshly rejected back. It started closing below the descending trend line, okay, over here. When we re-entered the support level again, we can see that the support did not hold for the 1, 2, 3, 4, 7th time roughly. The support did not hold here, and as always, as we showed in the last couple of examples, we got a sharp move down when the support was lost, and sellers came in and took control of the market and, you know, moved price down quickly. You know, similar to the bottom we had over here, price did recover straight out of this very, very quickly and ended up going on to a new run, just as we see here. Okay, so price does, you know, often mimic things over time, but that's the important bit of this lecture so far, just identifying where the support and resistance levels are and what they represent in the market.